Welcome back everyone to the Moneycontrol live stream. You are watching markets with Santo and CJ in association with M Stock by Mirai Asset. Well, it has gotten uglier than in the morning, Santo.
No surprises here really,
Yeah,
CJ.
the fear and trepidation in the market at this point of time is quite high. But if you look at it from the bulls' point of view, they can probably claim a Pyrrhic victory at this point of time, given that we did not break the March lows of 15,672 as of yet. There is still half an hour of trading left, so you may not know what may happen. But at this point of time, it seems like the market has bounced back a good 70 to 80 points from 15,684 odd levels. So it looks like that low is going to sustain, that support level, the crucial support level is going to sustain for the timing, Santo. But yeah, I mean, if you look at the Nifty and Sensex, they're headed for their seventh day of losses in 8 sessions now. The index is down more than 3.5–4% at this point of time. It's IT, banks and real estate stocks that are the major laggards on the indices, as well as the fear index. I mean, the fear index is up 12% at this juncture, although it's hovering around the 21–22 level, which is not really too much to be scared of given the levels that we were back in March, around 30–35 odd points on the fear index. So clearly at this point of time, a lot of worry, a lot of panic visible on the market, Santo.
Well, CJ, I only hope that the bulls are able to see the Pyrrhic victory for what it is and not get carried away once again. Just because the market bounced off that level, they may feel that okay, there is a good support here, and probably it's time to average.
But Santo, this is the third time. It's the third time in 4 months, almost 3 months, 4 months that the index, that level has sustained the index. So
but you fail to notice that every time the market bounces from that level and tries to go up, the highs it makes are lower than what it made the previous time. So this is a market which is kind of lost its steam and is trending lower slowly but steadily.
Well, I'd rather take a market which has lost its steam than a market which is in absolute carnage like the Nasdaq 100 at this point of time, Santo. So it's all relative at this point of time.
But well, CJ, now what remains to be seen is whether retail inflows will get hit. Because 1 year returns are close to turning negative, and when that happens, that is usually the point when a lot of investors have second thoughts about whether they should still be in the market. Although I would say that, CJ, this is ideally the market where you should be going out there looking for bargains. So if you have some spare cash on you, this is the market. You're never going to catch the lows, but definitely this is the market to be, where you start deploying your money little by little.
Well, thank you, Santo, for saying that. That is exactly what retail investors are doing, in my opinion. I mean,
if they have money left, and not leveraged.
They still have. I mean, look at the amount of money that they've been pumping into the market on a month-on-month basis, not only through mutual funds, but directly as well. I mean, the SIP levels were almost at record highs in the month of May. Overall equity inflows were quite good on a month-on-month basis, and very soon we will also have the direct inflow numbers from NSE as well, and I'm pretty sure that will also show that there was good amount of buying from retail investors. You can see that on a day-to-day data. The difference between the FI and DI has been quite large, and basically the difference maker is the retail investor cohort. So for me, I think they are still doing what you are suggesting.
CJ, see, again, the issue here is that you'll have to average selectively.
Yeah,
right?
That's true.
And
that is true.
I think in most cases, what would have happened typically is that as market kept rising, investors kept buying more of it on the way up, and every decline they would pump in more money, and that is where the issue is, because stock prices are still almost 3 to 4 times up from what they were at the time of the pandemic lows. However, that will be cold comfort to a lot of people who have leveraged their way up and brought more shares as the market was rising. So when you average out the cost, I think that's where the pain point now is. Even a slight decline from the top means that you would have given up most of the gains made over the last couple of years.
Well, Santo, as long it's giving up gains and seeing your portfolio down almost 50–60% are two different psyches altogether, right? At this point of time, giving up gains may not be too much of a panic button event for investors.
My worry. That's my worry, CJ. Because
I feel that will not be a panic button at this point of time.
The false confidence, because you've seen prices only go one way up, right?
So
yeah.
So what about
that is something.
Confidence. You need confidence. You need confidence to get through periods like this, right? You always keep on telling me that real investors are made during bear markets like this. So maybe, this is their initiation process. Let them go through it.
Well, with that, we move on to the stocks on our watch list today. Although, CJ, it's very hard to even say that I like any particular stocks given the mauling that,
Come on, there are 2,000 stocks out there. You got to like a few of them at least.
So, starting with ICICI Bank now. CJ, the banking sector as a whole has been out of favor for a while
Absolutely.
now, but that doesn't mean that there aren't good banks out there. So ICICI Bank is one such stock, good set of fourth quarter numbers. It had done well immediately after the fourth quarter earnings, but then along with the rest of the market, it has given up most of the gains. A lot of factors still going well for it. According to analysts tracking the stock, it's showing good traction in all its three key segments, which is retail, SME and business banking. Asset quality, there has again been a consistent improvement. The net NPA levels have also come down significantly. Besides, it has been able to grow its low cost deposit base, and there has been the provision coverage for ICICI Bank is among the best in the industry. So, this is one stock, CJ, one should keep an eye out for.
Well, Santo, clearly the numbers for ICICI Bank look great, but out of 2,500 stocks listed on NSE, you choose ICICI Bank of all of them. I mean, I read something today, about the lender, which you pricked me a little bit. I mean, I was going through their, their meeting analysis or the outcome from their meeting with Nomura's analyst, and there apparently ICICI Bank neither does it give a growth guidance in terms of loans, to the market or to analysts, but it does not even have a lending target within its own within the bank as well. I mean, to me, that strikes as very unambitious in a market like this.
I'll tell you why. When you set a target, that's always setting up yourself for trouble. The idea, I think the focus is to grow profitably. Focus on profits, not on targets.
How can you not have, at least you will have some ambitions and targets internally,
something you were saying yesterday.
You may not tell it to the market, right? You may not tell it to investors, you may not tell it to the market, but you might have a target
This
internally.
is something you said yesterday, right? It's very easy to give out money. You can tell somebody that this is a target, make so many loans and give out that money, but the main challenge is to then be able to collect that money back.
I mean, Santo, then ICICI Bank for me, frankly, is sounding like Kotak and Bajaj Finance almost 2 years ago at the depths of the pandemic. So, and I feel that this sort of conservatism probably is coming at a very wrong time from ICICI Bank, and that is why I'm a little disheartened by that this sort of utilization of words, if you may call it. Apart from that, if you look at one of the major factors why, in my opinion, ICICI Bank will not perform is it was heavily owned by FIIs in 2021. The entire rally of 2021 was driven by FIIs, and of course, if they want to come and book profits in this market, they are going to come to their winners first, right? They're going to sell their winners first. And ICICI Bank definitely will be top of the list for FIIs, and therefore I feel, given that FII selling is likely to continue in the near future, ICICI Bank will definitely remain under pressure
and create an opportunity for retail investors like you and me. Probably.
Absolutely. I mean, at this point of time, you will not get performance or returns at this point of time from ICICI Bank. Also, on the earnings side as well, I feel, given that a lot of the earnings boost was coming from a lot of the efficiency gains that the new management had to bring. You had bad loans crisis to solve, you had provisions that were being uncovered, so therefore a lot of earnings boost was coming from lower and lower provision every quarter. But I feel now that the earnings base has become higher in FY22, FY23 would be a little bit of a challenge in terms of absolute growth year-on-year basis, and that is why I feel that there could be possibility of a disappointment given the sort of expectation that the market has from ICICI Bank at this juncture. I think so for me, these 2-3 factors is something that makes me a little skeptical on ICICI Bank. One stock, therefore, where I'm not skeptical at this point of time and is looking quite good from a longer term perspective, I mean, you keep talking about stock picking, is Voltamp Transformers. Now the growth outlook is looking quite sturdy for Voltamp. If you look at the digital, distribution transformation market, they are expected to grow at a 5 to 6% CAGR over the next 5 years, given that energy demand is going to increase not only from residential housing but as well as from the industries. There is an argument that rising urbanization in the country as well will boost demand for transformers out there. So clearly there is a growth visibility out there for Voltamp at this juncture. The order book of the company stood at about 600 crores, Santo. So good revenue visibility as well. And lastly, HDFC Securities is of the opinion that investors should be buying the dips on the stock because they have a target of about 2,570 rupees to as much as 2,700 rupees in the most bullish case for the next 2 to 3 quarters. So clearly one stock that definitely makes sense to get into this market, given that valuations are quite reasonable for the growth and the certainty, near certainty in earnings that you are getting.
Well, I would agree with you on that one at about close to 18 times trailing earnings, and also
Yeah.
given that the numbers have been quite good.
And it also belongs to one sector that is actually providing earnings comfort at this point of
Besides
time.
that, I did also go through the key balance sheet numbers. In fact, an improvement on almost all ratios. That's so
Yes.
hard to nitpick on this stock. It's given good performance also from about 1800 to 2400 over the last month or so, among the handful of strong performance in this kind of a volatile market. Again, slightly, I may not really go in for the stock, but I can't find fault with it either.
Thank you, Santo. I'm
Oil
humbled.
India again. So in this kind of a market, you look for stories where the companies where there is certain bit of earnings visibility. Oil India is one of them. A clear play on rising crude oil prices. There are some concerns, no doubt, about the PSU status of the company, but otherwise, this is clearly a play on rising crude prices. According to Elara, it is factored in a crude price of about $95 per barrel.
Wow, that's conservative.
And
that's very conservative.
Based on that, it has increased its earnings estimate for FY23 by 89%. So this is a clear winner, because the current valuations, according to Elara Capital, Elara Securities, seem to factor in oil at close to about $65 a barrel, which is clearly impossible.
Well, Santo, you hit the nail in the head when you said that PSU is what distinguishes Oil India from any other energy sector story out there. If this was Exxon, if this was Aramco, I would have banged the table and told you to take my money right at this point of time. But because it's Oil India, because it's the PSU, there is always possibility of government intervention happening. Although the management so far has denied that there has been any talk about subsidy sharing, but that is one thing, cross that hangs over the head of the company. We have seen that in the past with oil producers. They have been asked to take the burden of higher prices off OMC so that they can then pass on lower costs to the consumer. So that is one risk. Apart from that, there has been a lot of chatter about a windfall tax on oil producers like ONGC and Oil India, so that the government can make up for a lot of the revenue that is let going through the cuts on excise. So clearly these two factors make me a little less bullish on Oil India, although the story is definitely spectacular if you look at it from the point of view of crude oil prices at this juncture. But I would not be too aggressive buying into the stock. I would rather be a little skeptical. If I have already invested, I would want to hold on to it and let it run ahead instead of averaging upwards, as you were mentioning earlier.
Well, CJ, one thing you also need to keep in mind is that even if there is a tax of any kind, it will be on profits. I mean, anyway, upstream companies are in a far better position than the downstream ones, like the oil marketing companies, which are sitting on huge losses. So even in case they are asked to share some bit of their profits, it will just be a loss on profits. It won't actually be a loss. And if you look at most other sectors right now, there is margin pressure, there is pressure on profitability, profits, and this clearly is a story. At least you are not going to see a decline in profits. It may not be as high as you had expected it to be, but still this is among the better stories out there.
Profits move stock prices, don't they, Santo? And you're making the argument of the lesser evil here. I mean, between OMCs and PSU oil producers. So I don't know, it's your choice to choose the lesser evil, but I just feel that even the lesser evil will probably not perform
great. Compare it with any sector, CJ, this will still give you better returns.
I'll tell you one sector that will give you better returns, not only in the near term, but also in the longer term, is Macrotech developers from the real estate space. Now, what a year it has been for residential property developers in FY22. Stellar earnings growth, stellar stock performance. Yes, a lot of it has been given back, given the general correction that we are seeing in this market at this juncture. A lot of real estate scripts have come off significantly from their record highs. Definitely in the wake of the interest rate hikes that we have seen from the RBI. But if you look at Lodha or Macrotech developers, clearly the stock has shown a lot of resilience to that sell-off. It's up about 27% in the past month alone, which is spectacular. I mean, it's almost the sort of returns that Oil India is giving or ONGC has given you in this market. The demand outlook remains quite strong, given that the company is gaining a lot of market share from unorganized players. Santo, you would know the way the industry is turning around since the RERA regulations were brought in. So clearly there is a lot of demand and market share to win for Lodha out there. Apart from that, the company is expecting about 25% year-on-year growth in its sales book this year after the sort of spectacular growth it saw in FY22 itself. So clearly a lot of earnings tailwind for Lodha at this juncture, and I feel that after the recent correction of 10% on a year-to-date basis, although the stock is up 27% in the past month, on a year-to-date basis still fallen 10% from its highs. So clearly the risk reward is quite attractive in my opinion, and it is among the best plays in the Mumbai real estate market. I mean, if you want to play the Mumbai real estate market, probably Lodha and Godrej are your only two bets at this juncture.
Well, CJ, if you notice over the last week, a lot of brokers have come out with reports on real estate, and by and large, the tone has been quite positive. And there are two reasons for that. One is that in metro cities, sales demand has been quite strong, and also at the same time, prices have been rising. Now, there are two major concerns about the sector in general. One is because of rising interest rates, will demand be hurt? And the second is because of rising input cost, will the margins be pressured? But on both counts, I think at the moment, at least most analysts feel that demand won't be hit so fast by rising rates,
my point.
and also input costs in fact are coming off a bit, which means that there should be some support to margins as well. So for the moment, I would say that real estate is looking among the better stories in the market. And moving on to the last stock on our watch list, well, CJ, you were vociferously arguing in favor of this stock, and well, I think I will.
You want to rub it on my face?
No, I don't want to rub it on. In fact, now with prices having corrected so much, I think so probably it does merit to have.
So you're seeing the stock from my lens. Is it? Yes, that is what you're trying to say. Finally, you've come around, Santo.
Okay.
Finally.
So Hindalco is the last stock on our watch list. Now the stock has taken quite a bit of a beating, and it started from the time when the company announced a capex plans, which is something most analysts were not really expecting. But according to Kotak Securities, only $1.5 billion of that $6 billion planned capex is in, the upstream commodity business. The rest is in rolling and recycling capacities for beverage cans and auto components, which is the high margin business. But at the moment, the market really doesn't seem to be looking at it that way. If you look at Hindalco after this correction, the stock is available at almost 1 time forward. It's EV to EBITDA for the commodity business, which according to Kotak is fairly cheap. So this is a stock I think probably you could keep an eye out for.
Well, clearly, Santo, I mean, I think not only the capex, of course, capex is part of the correction, but I think generally also commodity stocks have taken a beating after that initial run up that we had seen, in March following the invasion of Ukraine by Russia, when commodity prices were going through the sky and everybody thought this was the second coming for commodity market. But clearly that has not played out to script. At this point of time, growth concerns have overtaken commodity prices. It's no longer just about the price, it's also now about demand. You can keep on raising price, but if demand goes down, then you are in trouble, right? And that is what is happening with inflation being such a big issue right now, with central banks now dead sure that they want to fight inflation at any cost possible. It seems like demand has become a greater concern, and that is why we have seen global commodity prices, including aluminium, which was supposed to be one of the most tightest markets out there, probably after nickel, seeing correction in its prices globally. And I think that is what is hurting Hindalco stock more at this juncture than capex. And I think probably, even though I am bullish on the stock, definitely from a longer term perspective, given what is happening at this subsidiary Novelis in particular, but in the near term, I think the stock will probably remain under pressure. So yeah, if you have a little bit of jigra, you can go and start buying it on in a staggered basis.
You forgot the cojones part.
Yeah, cojones or jigra or balls or whatever you want to call it. Basically, if you have the appetite for risk, you can go and stagger your investment, Santo. But probably you might want to wait for it in the near term. You might even get better prices.
That's just to disagree with whatever I have said.
I'm not disagreeing. I'm just giving you some sanity. I just don't want you to get carried away with the entire value argument.
Man,
sometimes you have to keep your friends in check.
Right.
Sometimes you have to keep your friends in check.
Very true. Well, so today will end on a bleak note for the bulls, but is there anything they have to, look forward to?
Well, Santo, before we look forward to anything, I think we should just take a quick status check. I think the market has come off a little bit off the day's low. If you look at Nifty at
some 10 points or 0.01% or something like that.
About 26 points.
Clutch to
about
anything,
26 points. It's still meaningful, yeah. Come on, in a day where we have fallen almost 500 points on the Nifty, a little bit of bounce back is meaningful at this juncture. Hopefully, it seems like it looks like we are going to end towards the lows of the day at this juncture. The Nifty is down 2.6, Sensex down 2.6%. The mid-cap indices are actually faring a little better, if I'm not wrong. If you look at the Nifty, actually it's worse. Nifty mid-cap 100 is down about 2.9% at this juncture. So clearly,
all Robin Hoods are running for the exit door.
Oh, come on, they are not running for the exit door.
You won't admit it when it is right.
I'll show
Just
you the
don't
data.
argue for the sake of arguing.
When it comes out, I'll show you the data,
let's
Santo.
see that.
Then you tell me who is running off or not. That said, let's come back to what's on the horizon. Clearly, the Indian inflation data will come out later in the evening, so that is going to be one important economic data to track. It will lead to how the market will form its perception on what the RBI might do in the upcoming meetings, or maybe in between. You never know these days. So clearly, the inflation data will be very important. Apart from that, you have the US Fed member Lael Brainard speaking later in the evening. Now, why this speech is important for me is because this will be the first Fed member to speak after that blockbuster inflation data in the US that has spooked the market and is responsible for the red on the screen that you're seeing right now. So clearly, at this point of time, there are indications that traders have baked in a possible 75 basis point rate hike in the meeting later in this week. So if she provides any inclination towards that, that will be very critical for the market. So these will be the two things that I'll be really watching out for.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ, brought to you by M-Stock by Mirai Asset Management.
And please post your feedback on the comment section below, and do keep following us on the social media links at the bottom of your screen. For rest of your financial news, stay tuned to moneycontrol.com and the Moneycontrol app. We'll catch you live again tomorrow morning at 9 a.m.